Hello, traders. Welcome to Snipe the Trades end of day commentary. Well, today we're going to review what happened with the US dollar, given that we have the Fed's interest rate decision. But let's just wait for for a few minutes to give other traders the chance to join us. Okay, I think we've waited enough. So let's start by looking at the dollar index. Now, the decision was to remain with the same, or the decision was to not change the interest rate in the U.S., and that obviously gave some bearish pressure to the U.S. dollar. But I'm going to explain to you why. Basically, what happens is that if the interest rate is not changed, is because the Fed doesn't look at the U.S. economy outlook as strong as it should be at the time of the decision. So uh, the Fed decides to not hike the interest rates. So this is going to give the US dollar some bearish pressure because of the not so clear economic outlook on the US economy by the Fed. Had the Fed hiked the interest rate, that would bring on a lot of buyers on the US dollar. But in any case, we don't see a possibility of a rate hike this year, mainly due because of this. Well, if you look at this month non-farm payrolls, you're going to see that they were atrocious, and well, the job numbers are a very good benchmark for inflation. Um, and what we're going to do here is we're going to analyze what happened with the US dollar. This is the US dollar index, or the DX if you're trading futures. And what we're going to do right now is we're going to see the levels that we were working at. Well, we were testing this 95.11 level, which was tested as a support before, and interest rate decision came out a couple of like 40 minutes ago. Um, well, the the US dollar index continued its down move, and it has now broken with this structure. Okay, this is the important part. We have broken with this up structure that we were trading in. It looks more like a wedge formation. So, in if this looks like a wedge formation, then it clearly was a continuation pattern of the down move. Okay, and it was a very nice test at the top of the wedge and at the area of previous support. And if we throw some Fibonacci levels right here, we might find some confluence with those levels. And we have the 61.8 right around these levels. Okay, so that's what's going on the US dollar index. And as you can see, there's extreme volatility going on in the market, mainly due because of well, the interest rate decision. Now, if we go to the euro US dollar, you can see that well, we had a plan to play the euro US dollar, and the plan was to go long. And as you can see right here, we bought the euro US dollar at around these levels at the beginning of the session, and all of our customers and subscribers were notified about it, and we took profit right here. Uh, there was a very clear case of the Fed not hiking or leaving the interest rates unchanged, and that's why we decided to upfront this news. If the outcome wasn't going to be as clear as it was, we would have not traded the long side of the euro dollar or the short side of the euro US dollar for that matter. But in any case, it was very good. Well, the outcome was okay for us, and the levels that we were working at were these. Previous tested level of support, the 61.8. Of course, there was much more than just this in our technical analysis, but we don't want to well, fill you with technicals if we have some other currency pairs to look at. Okay, so basically we took profit around these levels because, as you can see, this was clearly a very important and pivotal zone in price action. On in past price action, we tested it as support, we broke with it, tested as resistance, and then we retested it as resistance. And as you can see, we made I think a healthy 80 pips out of this trade. Yes, we made 81 pips out of this trade. And when price hit this area, we immediately found sellers. And well, it really doesn't matter if what we found here were sellers or in fact we were the profit taking target. This means that not only sellers could have jumped in at this level, but uh, long positions just like us were closing them at this level. It really doesn't matter what happened because the effect is the same. We have some bearish pressure at these levels. And what we're trying to do here, we're trying to trade cycles. And that's exactly what we did here. Now, if we go to the US dollar Japanese yen, and then we're going to look at the S&P 500. If we look at the US dollar Japanese yen, we were in a short position, mainly because of the, well, the same interest rate decision. But not only that, we were actually this bear flag. The US dollar Japanese yen has been in a lot of pressure lately, and right now it broke with some important levels. And if we go to well, to a higher time frame, I'm going to show you um, that we are talking about. Let me just delete these two trend lines right now. Okay, no, we broke with these levels, and what we are expecting for the US dollar Japanese yen is to test the lows of um, well, of the structure. This is a very important level that needs to be tested in order for us to have an immediate bias on this currency pair. Right now, we are just trading the last part of the move, okay? Even though we did test and retest these lows. I'm sorry, let me just grab the horizontal line. Test and retest these levels. I really think that we need to test the lows of the moves, which confluence with, well, not confluence with, which were tested as resistance right here, okay? Well, after we started in a very strong bull market at the beginning of the year. Now, we were in a very strong bull market, then we broke to the upside. There was absorption of sellers right about these levels, and then we retested it back. Now we're going to go back, and we're going to go back to the hourly because we are trading not intraday, but maybe in an intra-week move. And as you can see, well, this was the first level that we retested before creating this bear flag or bear valuation wedge, but the level that we are looking at is this one, and that gives us a 70 pip target and a better than a 1 to 2 risk to reward ratio. And basically that is what we're waiting for on the US dollar Japanese yen. And of course the interest rate decision to well, or the Fed's decision to leave the interest rate unchanged helps us a lot on our bearish position or on a short position with a bearish bias on the US dollar. Now, if we go to the E-mini S&P 500, these are the E-mini S&P 500 September contracts. No, yes, September contracts. So what we have here is basically a continuation pattern. Um, if we go to the 4-hour chart, you can see that we actually jumped back or well, we tested this previously, tested area of support. I think we have some Fibonacci levels that confluence with the test of the zone, which is the 61.8. But what mainly drove us to take a long position on the E-mini S&P 500 is again the rate decision, or the decision to leave the interest rate unchanged. Now, let me explain to you why it's important to understand what happens when an interest rate gets changed, or is decided to get hiked or left unchanged, etc. When the interest rates are low, it is cheaper for companies to borrow cash. So companies have access to cheaper cash. Since companies have access to cheaper cash, and of course, well, that's the whole point of the policy about the monetary policy on keeping interest rates close to zero, is that companies could have access to cheap cash, so they can invest, generate employment, etc. So instead of just printing more money or pushing money on the economy, that is better way with a not so high inflationary cost on the economy to jumpstart it. So basically, if companies have access to cheaper cash, this is going to be bullish for stock indices, because well, it's logical to understand that when companies have access to uh, to cheaper cash, they are going to take that opportunity to invest, and they are going to grow. They're going to have more employees. They're going to have uh, larger product bases. They're going to have larger sales, etc. So that is bullish for the stock indices. But the reaction on the E-mini S&P 500 after this well, the decision to maintain the interest rates at the same level was well, not what we expected. But we are going to keep our long position on this stock index. So we are actually let me see. That's right. It's about 20 points. Our risk is about 20 points, and we are targeting these zones for about 34 points. So basically, we have a better than a 1-to-1 risk to reward ratio on this trade. And but, well, we are going to keep a closer look at this trade, because at the very, very first signal of bearishness or continuation of this down move and a break of this zone for a retest of the lows, maybe we are going to close the trade. And of course, you are going to get the email and the SMS when we do so, if you are a subscriber to our service. But in any case, that's what happened today with the markets. And we're very happy because we did close our trade on the Euro US dollar. But I mean, we are going to continue with our trade idea on the US dollar Japanese yen. Hopefully, we are going to hit these targets, because as you can see, we already made a new low, breaking with the previous low and making a lower high, which means that we are still very much in a bear market. And if you want to get notified by email when we go live on these end of day commentaries, then just subscribe to the YouTube channel.